Alright, ladies and gentlemen, back again with another crypto video. Today we're going to try real hard to keep this one short. Not another hour one, I swear to God. We're going to keep it into kind of a couple of parts, three main parts. We're going to start off with some technical analysis, which I don't put a lot of stock into technical analysis. If you saw my history of crypto winter and bear markets video, which I'll put in the top right, that's clearly not the emphasis I have. But we'll talk about some models, some technical kind of models, and what they potentially predict for the future, just based on price action in the past and what we can potentially expect in the future. And in Bitcoin compared to traditional stock assets, these might have a bit more weight, just because there's the programmable part of it, where certain changes in supply are very much programmed into the price, basically. And then we're going to move on to more fundamentals-based kind of look at the current market. And then we're going to try and bring it all together and evaluate the overall narrative and see where we stand right now. And so let's get into it. So to begin, let's talk about stock to flow. All right, stock to flow is something that a lot of people, let's talk about Plan B in general, right? So Plan B has thrown out a number of predictions that people were super excited about, maybe a little too excited about, to be honest. And some of them have at this point been wrong. And it's potentially looking like, to some people, that stock to flow might be invalidated in the near future. I don't agree with any of that, really, necessarily. So what doesn't seem to be correct is his floor model, right? So remember, he said 98K by the end of November and then 100 plus K in December. That's clearly didn't happen in November, and it's highly unlikely to happen in December from how it's shaping up. We're clearly on what? About halfway through December. Jesus, that was fast. About halfway through December. And the upwicks that would have to happen for us to get above 100K in December this month, in the next 2 weeks, I mean, this is unlikely. This is unlikely, to put it lightly. I don't think we're going to hit six figures this month. That's ridiculous, right? So does that mean that stock to flow is invalidated? I don't think so. One thing that we should emphasize when we talk about stock to flow is that stock to flow is not out here calling peaks and troughs, right? Stock to flow is all about average price during a given time period. There's a graphic that Plan B likes to use on his Twitter where he sees there's a polar bear standing on a ball and he's pushing the ball down, and as the ball goes down, when the polar bear gets off, it'll shoot up, is the idea, right? So why is that important? Well, if we're talking about averages and we're currently below the stock to flow average, then at some point it's going to shoot up well below the average point in order to bring that average up to where it's predicted to be. And actually, the idea is that we should be able to use stock to flow at least until we get to gold's market cap, 10 trillion. And actually, I think Plan B says well above that, actually. We'll see about that. The next halving cycle will be very enlightening when it comes to stock to flow. But I don't think six-figure Bitcoin is going to happen this month. At this point, it seems extremely unlikely. We were all hoping for it, but very potentially the idea, the entire market hoping for one thing, all expecting one thing, I think that led to some really negative consequences. The recent flush of leverage, right, where we had that massive long liquidation, I think all of those people essentially just bet really hard with excessive leverage on the idea that we're going to reach certain price points based on Plan B's floor model, essentially. And it backfired really hard, right? So lesson from that is just don't play hard with leverage, honestly. I don't use any leverage. So there's that. And then let's talk about a more interesting concept here. So stock to flow is something a lot of people know about. And another thing that's kind of gaining traction at this point is the idea of lengthening cycles and diminishing returns, which is something that Plan B and Benjamin Cowan, credit to Benjamin Cowan, I didn't come up with this, has been talking about for a while. Ben Cowan has been talking about that for a while. So basically the idea is that the difference between like the 2013 cycle and the 2017 cycle, something like 35%, but actually when you talk about between peaks It's been something like, you add 2 years, 4 years, 6 years. And by that pattern, you would essentially be expecting a peak for this bull market cycle all the way out in Q1 2023. So very, very possibly we'll have a long time before we hit, these types of 100K, 140K, 200K kind of price targets. That might not be till 2023, which also pretty explicitly states the fact that, the bull market isn't over, right? People were talking about in October there was a 64K top, and that might be the top. Then in, more recently, I believe it was November last month, where we went to 69K, and people are like, well, maybe this is the top. These are probably local tops. And very likely, in 2022, we may put in some new all-time highs. But the bull market may stretch all the way past 2022 and all the way into Q1 of 2023. It's very possible. Lengthening cycles, diminishing returns. The second part of that makes a lot of sense. So when we talk about the Bitcoin market cap, we're at 69K, we were above a $1 trillion market cap for Bitcoin alone. As that market cap goes up, it's going to be harder and harder to move the price, even with institutional adoption, right? Now, don't get me wrong, institutional adoption can still move the needle a lot, because even compared to a multi-trillion-dollar company like Apple, or the type of funds that Apple can move around, the market is still relatively young. It's still relatively small. So we can still see changes, pretty significant changes, but they're going to take more time. So if you look at, I believe this cycle started around the 10,000-ish range. And then we're now talking about 100K. And we're really taking our time getting to 100K. What is that? That's a 10x, right? The very first big bull market cycle was a 700x. And after that, it was 500x. And it was 100x. And now we're struggling to make anything like a 10x, right? If we go all the way out to 2023, and we have this extended cycle, and we see more and more gains, a bit more steadily and a bit more slowly, we could still get 20x. 20x is amazing compared to any other asset that you could possibly invest in. But it's also somewhat disappointing for the crypto world, isn't it? 20x is amazing, and it's still kind of disappointing for crypto, right? That's the wonder of this particular asset space. But you may well expect diminishing returns. If you put all these cycles next to each other, each peak in terms of ROI has been lower than the previous peak, and each peak has taken a bit longer to actually come if you measure from the most recent halving. And so this is a cycle that makes more and more sense the more I think about it. This particular theory, we will be able to know more by the time we get to the next halving and see how the asset behaves from there on. But between now and the next halving, I kind of am leaning more towards the lengthening cycle, diminishing returns avenue. So then let's talk about near-term price action. I don't care is really the short story here. But something, Kevin Svensson or something like that, there was a crypto channel that was talking about a pattern that they had noticed, 3 peaks and a domed roof. Right, 3 peaks and a domed roof would suggest that we've had 3 peaks and now we're about to head straight down, essentially. And we might see, even below 42K support, maybe even into the 30K range. That would be actually awesome as far as I'm concerned. As we'll get to in the final section, I hope that dip happens, and I plan on buying that dip. That would be fantastic, because if we ultimately get to 100K, I bought mostly in around 30 and 40K, right? That's okay, right? But even if we get to 100K, that's not even a 10x on my money, right? And say if we get, well above that, and now we're at 200K, right? Then we're in a better situation. That is pretty realistic potentially for 2023. 1 to 200K is pretty realistic. But this kind of a dip, which may potentially happen in the near future, 3 peaks and a domed roof, and then we, go down into the abyss for a little while. and blood is running in the streets, and extreme fear on the fear and greed index just pops down to like single digits, which I've never seen, but we may well see, you can really decrease your cost basis that way. So that would be really cool. So near term, I wonder if we're going to see a dip. There have been some talk about bottom indicators and how we might actually be going up in the short term. Maybe. Once again, I don't care. In the long term, I remain very bullish. So in terms of the technicals there, the idea is that potentially we may just take a bit longer to get where we're going. Let's talk about the fundamentals now. There have been some kind of concerning developments, and there have been some things that we got to talk about, right? So we're talking about ETFs, right? So as we all know, there's the futures-based ETF, which there's a couple of futures-based ETFs at this point, which is fine, but a very inferior price inefficient instrument that nobody was asking for. Nobody even currently wants. Well, I shouldn't say that. It reached $1 billion faster than any other ETF ever in history. So it's not like nobody wants it, but that's not what we're asking for. We want a spot ETF. Fidelity went to Canada to launch a spot ETF. Brazil, Singapore, Germany all have spot ETFs, but they're not the United States. They're not the United States, and they're not China, right? China, it's not going to happen. The United States, it should have happened, but so far, Van Eck and Wisdom Tree have both had their spot ETFs shot down, rejected, which sucks. I think Grayscale was planning on doing a ETF application for spot, hopefully trying to make that happen in time for Christmas Eve, like December 24th. And give us like a Christmas rally potentially as a result of that. But it seems like right now they're probably going to get rejected. That seems to be where we're headed when it comes to spot ETFs this year. 2022 may be the year that we see that, and ultimately the rise of that level of institutional adoption as a spot ETF directly affecting the price, that could potentially give us a lot more return than we're expecting, but we'll see. It depends on how much these asset managers end up allocating to cryptocurrency. Once again, we have a large market cap in Bitcoin and the crypto market cap in general. It'll take a lot to move, Then we got to talk about hacks, right? There was the Badger DAO hack, there was the Bitmart hack, and most recently, I believe there was the Ascendex hack. We'll come back to that in part 3, but there have been a number of hacks. My recent move of the majority of my crypto holdings to cold storage was very much in reaction to that. I'm like, man, you can't sit on these hacks. You really got to go self-custody because it just makes me nervous. Binance was hacked in 2019. Never forget that. It's not like the big exchanges don't get hacked, right? The big exchanges can get hacked, and if Coinbase gets hacked, that could be a real issue. So there's that. That's just something to be aware of. There are multiple exchange hacks. We'll talk about how that affects the view of the market at the end. Solana got attacked. I believe they said it was as a result of bot trading, and that slowed their network to a crawl, which isn't supposed to happen with a network that resilient with that many TPS, right? It's kind of makes you a little nervous. Now, some people are saying it's a DDoS attack as well. If that technically qualifies, I don't know exactly. Some people are saying that it's not technically a DDoS attack. One way or another, the network was kind of interfered with, but no crypto was stolen. Makes you a little nervous, but the network stayed up. There wasn't a 24-hour downtime or anything like last time, so that's good. And then let's talk about what the other side of it is, right? So we talked about some bearish things. Let's talk about some bullish things. Fear and greed index recently was down as low as 16. I've never seen it down as low as 16. Likely it may well go lower, especially if the price falls anymore. I believe we're hovering around 46,000 as I film this. So that's typically the time to buy, right? We're still in the extreme fear to fear range. I believe we're kind of back in the 20s right now. But when there's blood in the streets, you want to buy. So when everybody's afraid, it's better to buy then, because at some point we're going to start getting greedy. And especially when it comes to alts, all it takes is news the likes of which BTC was seeing years ago that would make Bitcoin pump. Now, we're still at a point with most altcoins where they can pump on very just random news that you might not have seen coming at all. Doge recently pumped 20% because Elon Musk tweeted that they're going to start accepting Dogecoin for merchandise purchases, but not Teslas, right? So we'll see how that goes. If you were in Doge, you might be happy about that. I got out of Doge a while ago. I don't hold any Doge. And then, there's Sparkassen, a German bank that has like 50 million customers, is now beginning to think about offering Bitcoin and crypto services where they can buy directly through the bank, which we'll talk about. I think that's more or less the big strategy that banks are looking at these days. So that's a big deal. And then Polygon. Polygon has recently seen another rally that was really good for its price. The recent dip eliminated a lot of that, which is, what are you going to do? But they're essentially going to think about implementing coin burning similar to EIP 1559. Polygon, given that it's a capped supply token, that could be really big. There could be a lot of Matic token burned, which could be really, really interesting. So that's really bullish news for Polygon. I am a Matic holder. I'm a huge fan of this news. We'll see how exactly it plays out. And then for ADA, I'm also an ADA holder, although I haven't really been increasing my bag nearly as much as I was before. Sunday Swap did a test net for the Cardano DEX. And they supposedly, they said it was a successful test net run. We don't have a main net up yet, but likely in 2022 we're going to start seeing a DEX and then more DEXs come out for ADA, and that would be really, really bullish for the price. So we could see increases in Cardano in 2022. Hopefully we get back up to around that $3 mark, and potentially, I don't plan on starting to sell anything like Cardano until we either get to double digits or close to double digits. So I'm gonna hold off on the significance of this news for a little while. But some people I know are planning on selling somewhere closer to back at the old time high, the $3 mark, and just triple your money, get out, and that's a potentially reasonable strategy there. Especially if you're not super bullish on Cardano long term, which I still remain, especially if you're talking about Metcalfe's law and the potential effect of Africa. I think we still have a lot of potential, but they got to get their Hydra out. I mean, I think they only recently decided to acknowledge the real importance of things like TPS, and they want to try and parallelize the development of Hydra alongside the rest of what they're doing. So they pulled Hydra forward from Basho, the next era of Cardano, and they want to try and start working on that and get up to their scaling to literally like millions of TPS as soon as possible. I think it's a good move, but we all know that fast tracking something for Cardano and IOHK, it's fast tracking with quotation marks, right? They don't really do anything fast, but they do things very carefully. We'll see. I don't know that I used to be really, really into that theory of doing everything peer-reviewed and rigorous, but you can't let perfect be the enemy of great and great be the enemy of good, right? They're really been dragging their feet, and I get it. They want long-term success and they want long-term resiliency and security, but as long as Solana's decentralization issue doesn't get crushed by regulatory concerns, Solana could start eating their lunch. They've already flipped Cardano. If they get too far ahead, that first mover effect is a big deal. Let's move on to part 3, because there's another thing I want to talk about that kind of moves into, pulling it together. What are the risks to the market? And what are the things that we could potentially see as an issue in 2022 and going forward? First of all, I think NFTs are a bubble. Let's just get the elephant out of the room right now. I think NFTs are a bubble. I think they were a bubble back when we started selling a sprite of a rock for, I forget how much it was. It was like 9 figures or something? Not 9 figures, but like 6, 7, 8 figures, something like that. That is ridiculous, right? We're selling things. I'm not saying NFTs have no value. I think NFTs have great place in society going forward. I think that's going to be fantastic. NFTs are almost like crypto in terms of their significance for the future, but they're in a bubble right now. They're going to crash hard, and Solana could get hit pretty hard with this. Ethereum even more so, because obviously OpenSea and all that stuff. Ethereum has some stuff to lose because of that. Solana has a lot to lose because of that. Cardano has an NFT marketplace. I don't think they have as much to lose because of that. But an NFT crash could be huge. Regulatory concerns are really big. We had that congressional meeting, and I thought it went better than I was expecting. But going forward, Bitcoin and Ethereum are the most resistant to these regulatory concerns. So I think that's really a point in their favor going forward in the next year or two at the very least. We obviously have the inflationary environment that we have to think about. If people continue to think of Bitcoin as a hedge against inflation, as a lot of asset managers kind of are at this point, that could actually be really good for Bitcoin. We're already at a point where certain, if you're having interest rates on loans that you're taking out that are below the current rate of inflation, which most recent CPI was 6.8%, you're essentially experiencing a negative interest rate. The number's going up, but not in line with inflation. As long as your wages keep up, which they haven't been in a lot of sectors, that's admittedly true, you're essentially paying less over time. Or at least the money you're paying is worth less over time. Okay, so we talked about those hacks, right? Ascendex, Bitmart, Badger DAO, all kind of this year. And those haven't, as far as we know, obviously we have multiple dips in a row recently, and we'll see what that kind of plays out to. Remember, bear market is 20% for 2 months. We'll see what the long-term implications there are actually, but really, hacks in the context of the current market cap are very different to what they were years and years ago. Remember that crypto winters and bear markets video, these were huge catalysts, especially in the first large bear markets and crypto winters, is when there were hacks, lawsuits in response to the hacks, and then obviously the first crypto winter was Silk Road and all that stuff. But there were 19 hacks in 2019, right? 19, and there was no bear market or no crypto winter or anything as a result of those hacks, right? So as the market caps increases, I think these hacks are seen more and more as opportunities for learning, as opposed to just large faith-shaking events that will destroy, investor confidence for a long time. So they do, at the very least, make me nervous enough to go into cold storage, but we have that particular solution, and we have multiple options for those solutions. As I've mentioned, as I've pointed out and made a video on, Ledger, Trezor, and there's other options. Cold storage is an option. More people know about it. More people are aware that you can do things to kind of hedge against the possibility of, that third party, that counterparty risk, and, take self-custody. Next thing I want to talk about is, why is it that we have a futures-based ETF and not a spot ETF in the United States? I have a theory. I think, so looking at other developments around the world and even in the United States, banks are rushing to try and offer crypto-based services. And if they look long enough into the future, they've probably potentially realized that this is the end for them if they don't get a piece of the pie. Not just holding crypto, but getting involved in the market. Because ultimately, cryptocurrency can do everything that banks do better, right? People are going to prefer to do things through the crypto market and through decentralized means than going through a bank. So I think the bank's big play at this point for self-preservation is to try and get in between us and the crypto, right? We already have these exchanges that are kind of beating them to the market, but I think now they're going to try and have the ones that actually manage these spot ETFs when they do come out, and they will come out, be the big banks. So I think they're kind of holding off until somebody who, because really the reasons that they're talking about, not doing a spot ETF, as far as they have answered that question, is that they aren't satisfied with the custodial solutions available. There are multiple commercial, large-scale custodial solutions available. It's not that they don't exist. It's just there aren't any major banks who currently have that set up. I think as soon as that comes out, as soon as Goldman Sachs or something like that comes out with a satisfactory custodial solution, then the spot ETFs come out. Grayscale is getting mad about this because they're like, hey, we can handle this, right? We have a bunch of places that can handle this. And I think really what the SEC is trying to say without saying it at all is that we don't want you to handle this. We want them to handle this. Because I think they have the money in the system, and this is really about self-preservation for the banks now. Because I think it's starting to get a little scary for them. Because in the long term, it may not be now, but maybe within a decade, they don't have that much time left to go. They're screwed. They didn't take the threat seriously to begin with. They're gonna have to now. And as we increase our level of institutional adoption, we come back to this idea of the super cycle. So there's a lot of bullish things that are potentially going to happen in the future. And not just with Bitcoin, but with like Ethereum going to 2.0, coin burning introduced in Polygon. A lot of the bigger coins are doing super, super well. We'll see how the NFT boom plays into that. But with the price going down and the types of retail on-ramps that are currently available, Coinbase, Binance, etc., easy to buy into the crypto market. When that FOMO finally hits and we start going towards six figures and maybe even 200,000 plus, we could have some runaway momentum that could let us go high and stay high for some time and potentially keep putting in all-time highs to an extent that, we never really saw with the previous cycles. It might even invalidate the idea of cycles. And that would be the super cycle. But remember, this would be an extremely speculative thing that would be hard to predict going forward. I mean, it's never happened before, so if it does happen, it's a new era. So we'd have to see. I think the big potential thing that would potentially go us into a super cycle is not so much institutional investment, but countries investing. El Salvador is number one, but El Salvador is not enough. El Salvador is a little too early when it comes to countries investing. Others are going to have to jump in. I know a bunch of other countries are thinking about it, but at least one or two more are going to have to start jumping in and really buying the dips and stuff like that before we start getting that runaway momentum, before we start to defy gravity and go to the moon. It's going to take a bit more. I don't know that institutional adoption by itself is going to be what drops the super cycle, but I think it's maybe enough to at least start lengthening the cycles and potentially even combating some of that decreasing return, but that's only going to last so long. At some point, that return is really, really going to start tapering off. It has to. It just has to. Heard about institutional adoption. Remember that institutions, when they buy large amounts of Bitcoin and cryptocurrency, they're not necessarily buying on the open market the way we do. They don't just go to a Coinbase exchange and just buy, with their account on Coinbase or something. Oftentimes they'll go to the OTC market, the over-the-counter market, over-the-counter. So they basically just buy directly from somebody, oftentimes at a premium, like they'll pay. That's why people like Michael Saylor, MicroStrategy, when they buy, you don't see necessarily a huge change in the price because they bought directly and they may have bought at a premium and their cost basis may not match the recent price for Bitcoin. And that's why. And so when those types of purchases are big purchases, but they don't have an effect on the price that we're going to see on the exchanges. And so institutional adoption will at some point have a massive effect on the price of the cryptocurrency market cap, but not until they decide that it will, pretty much. They're going to have to decide to do some trading on the open market and alongside an increase in retail volume on the open market for the price to actually go up. So that's why you can see these kinds of bigger buys without large changes in the price. Now we come to me. What am I doing at this point? So I recently kind of consolidated some of my altcoin positions into USDC. I took some, I guess you could say, profits. And the point of that is to have money left for, I think, potentially future dips. I bought some extra Bitcoin, some Ethereum, some Solana, and a very small amount of ADA. I'm mostly just staking Cardano at this point. Very, very small contributions. But Bitcoin, its current price, 46K, 45K at some point, this is a decent buy. Better buy than it was above 50K. I think we could go lower. I think we could re-challenge 42, 43. And if we could get down to 30K, that range, that would be fantastic. That would be ideal. I would love it if Bitcoin went back down to the 30K range. But Bitcoin is not going to be where I put most of my money right now. Because I think in 2022, in the nearer term future, we'll probably end up getting a lot more ROI putting money into like altcoins like ETH and Sol. So Ethereum, I always wanted it to go below 4,000, but now we might even be able to reach below that. If Bitcoin keeps dipping, we could see, you know, like 3,000 Ethereum. If we get even close to that, if we get below 35K, I'm gonna put much more of that consolidated altcoin money into Ethereum. Now that we are below like 39, 38K, I'm still, you know, putting some of that steadily into ETH. And then Solana is, you know, you got to be careful with Solana. Solana definitely is a really big play there, and it is essentially my third biggest holding at this point. Cardano being just below it. And so Solana has a lot of great tech, but it is pretty centralized. And if regulatory issues become more significant, if the SEC decides that Solana is next, Solana is a very valid target, you know? Remember, like I said before, Bitcoin and Ethereum are the only ones that are truly exempt from this type of SEC targeting. Solana could potentially get targeted, and that would be a big issue for the price. So that's something to keep in mind. The NFT, the elephant in the room, is their NFT market. When that bubble pops, Solana's in for a lot of hurt. And then these attacks, I don't know what to make of the attacks, to be completely honest, but I am pretty bullish on Solana just because they have a lot of things going for them. I can go into that in a separate video, but I mean their funding, their development team, they have a lot going for them. But we got to be careful. I got to be careful with Solana. So I am admittedly, recently I bought an irresponsible amount of them, you know, like Ethereum, Solana, that's more where I've been headed towards right now, with Bitcoin obviously bringing up some of my other top things that I'm DCAing into. Leaving most of my other altcoin positions alone, and then being very, very selective about which altcoin positions I'm going to get into instead of aping into everything that has potential. I'm looking more for performance right now. And I'll do a portfolio update later today, I guess. Now, the other thing that I want to mention before we let you be is if the Bitcoin cycle extends, that bull market extends all the way into 2023, does that mean that alt season is delayed until after 2023? I don't know about that. Because Ethereum and its other altcoins don't necessarily stick to the same seasons as Bitcoin. And so they may still have a really, really great Q1, Q2 2022. And the thing about that is that Ethereum is really about half of Bitcoin's market cap right now. 2022 could be the year of the flippening, in which case altcoins could potentially just rally to the moon. I mean, it could be crazy. If we see a flippening of Ethereum over Bitcoin, that could be huge. That could change the entire market dynamic if Bitcoin is no longer number one. If a proof of stake chain becomes number one, and that's Ethereum 2.0, I mean, all bets are off. A lot of stuff could change. Is that going to crush BTC? Is that going to make BTC rally? So going forward, I think, in conclusion, I think going forward, time is on our side. Time is on our side, but remember, you got to be on the side of time as well. The dip may well get worse in Q1 2022, at least for Bitcoin specifically. The Mt. Gox lockup, 100,000 plus BTC, all released over the course of however much time. That's likely all going to happen in like Q1 next year. And that may dip the price further before we see any new all-time highs. And that may even bring us to a prolonged bear market as well. I mean, that might be a really significant dip. That's where, you know, I feel comfortable potentially keeping some money in reserve to maybe go into that 30,000 range, because that may well happen before we go back up to, you know, six figures or anywhere close. So, you know, time is on our side. Longer term investment horizon investors will, I think, do better the way that they always have. They always have done better. And if that's something you're comfortable with, I think you're going to do better than people who need it to go up in the next month or two. So that's the way it is. Portfolio update later today. Thanks for watching. Like and sub.